Welcome everybody, my name is 𝐏𝐨𝐬𝐬 and this is the Market Meditations podcast. We chat with fascinating people from around the world to extract mindsets, routines, stories and habits to help you build richer lives. Meditators, today we have the founder of the world's first NFT fund here to teach us everything we need to know about how to invest in NFTs, how to categorize them, how to assess their value. Then he gives us insight into his favorite projects and the future of the space. You're going to absolutely love this episode. Before we jump into this episode, don't forget that I send hand-picked market news, insights and education to over 6,000 traders and investors 3 times a week. To get access to this, all you have to do is sign up to 𝐏𝐨𝐝𝐻.substack.com. Meditators, welcome to another episode of the Market Meditations podcast. Thank you so much for joining us. Today, we continue down the rabbit hole of NFTs. We're trying to learn everything we can about this thriving, hot topic right now. And I've got with us Andrew, who's very knowledgeable in the topic. Thank you for joining us, Andrew.
Kurush, thank you so much for having me.
It is my pleasure. And how about we start with, Andrew, how are you intertwined in NFTs? How did it start and how did you get here?
All right, yeah. So my journey into the NFT ecosystem kind of started in 2013 when I first learned about Bitcoin and started getting involved in Bitcoin. And then in 2014, unfortunately, I sold all my Bitcoin. And I was like, these coins are worthless. It's all about blockchain technology, right? And I became a big blockchain, not Bitcoin believer. And I actually tried to start, I was living in Dubai at the time, and I tried to start a remittance business utilizing Ripple. And because, Ripple was like kind of this earlier, it's still actually around, but this early crypto project, and their big use case was remittance. And I was like, oh my gosh, this is perfect. I'm living in Dubai, everyone's from somewhere else, and remittance is just a massive market. And so, that went absolutely nowhere, that startup. And I had a full-time job at the time, so it was nights and weekends. And then fast forward to 2016, moved back to the States. I wanted to focus full-time on blockchain again. And I tried to do a blockchain-based accounting for small and local governments. That went nowhere. And then basically I thought, okay, you know what? There's a lot of speculative value in these coins. Maybe there's not a lot of fundamental value, but maybe I can make some money just by speculating on these assets. That was super lucky timing because 2017 happened. The whole market went crazy. And I basically had enough capital where I could launch a fund. And the reason behind launching a fund was, okay, listen, I can't build anything. I'm not technical. No one will join me. I might as well deploy capital to the best builders in the space. And I knew nothing about funds. So I teamed up with a good buddy of mine who he was a private equity guy for a number of years. He actually quit his job, moved back to Chicago because he was in Hong Kong at the time. And we launched Polynexus Capital in July of 2017. That's just a traditional crypto fund. Operated that vehicle for a number of years, and it's still operational today. But we quickly realized, okay, we're not going to become, the poly chain or the paradigm of the crypto space. We made some early mistakes which we recovered from, but you really need to increase in size quite quickly in order to become kind of a larger player. And from basically 2018 to 2019, I was looking, okay, what niche within crypto can we enter and become kind of larger players in? Luckily, I had a good friend who was really into NFTs, and she introduced me to the space. I was like, listen, you got to check this out. So I went to this conference called NFT NYC in New York. It's like the big NFT conference, and there is probably, 200 people there. And I'm walking around trying to figure out, okay, what's going on? What are NFTs? What's this buzz about? Because I had bought CryptoKitties back in 2017, but like there's no connection. I was like, there's no wider market here. And I see a guy sitting by himself in the corner on his iPad at this conference. So I walk over to him and I'm like, hey, my name's Andrew. Nice to meet you. I sit down with him and I sat with this guy for like 4.5 hours. So just totally engrossed in this conversation. I basically didn't see any of the speakers, but basically what this guy told me was that, listen, there's 4.6 billion internet users, right? So that's all you need to access these markets is internet. And then we're attached to this global and censorable 24/7 financial system. So the ease and cost of doing business is basically zero, right? It's super, super easy. So you can transact with someone in China, Venezuela, UK, wherever, it doesn't matter, right? And then suddenly we've added NFTs, which are like digital property rights. And we've enabled anyone to create any sort of tradable good on the internet suddenly, right? And I was just thinking about that. I was like, okay, wait. So what we have here is potentially the world's largest market. And I realized that right then and there at the conference, sitting with that guy, and I was like freaking out. I was like, oh my gosh, this is going to be perhaps bigger than crypto because it's going to lead into a metaverse, which is a virtual environment that people live, work, and play in, because no one wants to live in an environment where they can't own their stuff. They do all this work and they get nothing for it. It's kind of like the Soviet Union during, when they were communist. It's like people were leaving there because they're like, I want to go move to somewhere with property rights where I can build wealth and, raise a family and buy a house, buy a car, etc. And it made a lot of sense for me that, okay, wait, we should have property rights in the digital world. If we're spending so much time there, on Facebook, on Instagram, on all these apps, it makes sense that you can own your goods in the digital world. Anyways, so I started researching and investing like crazy. I launched the Sfermion, which is the NFT focused fund, in September 2019, which is my capital, building up a track record, building up the back office administrative side. And then I started raising capital summer 2020, which did not go well. People were not in NFTs in summer 2020. And then luckily, the tide kind of turned in fall of 2020, because that's when NFTs got hot. And then I was able to launch in January of this year with some outside capital, and things are going well. And obviously, the market's a little bit overheated, but we can get to that topic later.
So I always know it's going to be a terrific episode when right off the bat, I've got too many questions I want to ask the guests to even know where to begin. That is an incredible journey. And the first thing which just stood out to me as you were describing it is a recurring theme I've seen in successful entrepreneurs, and that is facing failure after failure after failure and just instantly unfazed pivoting to the next one. Could you tell us a little bit about how you deal with failure and just continue believing in yourself and moving forward?
That's a really good question. No one's ever asked me that. I don't really have a good answer, except that failure for me is not just, it's just like I don't even consider it not necessarily failure when I do fail. I'm just like, listen, okay, that didn't work. It's not necessarily a failure. I'm going to go, slightly, if the pathway is here, I'm going to tweak it slightly so I can try this way. So I don't know what it is really, but and like, for example, like I am actually a college dropout. I dropped out of college to go move to the Middle East to go work for a totally random company while I was out there, and then my passion happened to be blockchain related, stuff, and so like I have no formal background in anything, and just like I learned by doing, and I think that that's the best way to learn for like whatever it might be, except for like hard sciences. Obviously, you need a formal education for that, but yeah, for me, it's always just been, okay, just keep pushing no matter where you are, never be satisfied with the status quo. You always have to keep, I could be the top crypto fund in the world or top NFT fund in the world. It's not like that would matter. It's just like, okay, you got to keep going. So I don't really know what it is. That's a really good question. I need to come up with a better answer.
I think that was a great answer. I mean, it sounds like it's two things I picked up from your answer. Number one, it's an iterative process. So a failure doesn't stop the road. It pivots the road to a slightly different direction. And the other thing, you don't view it as a failure. You specifically said, like, I don't see this as a failure. That's not how I view it. So it's like a mindset shift to just not treat a failure as anything bad or negative, just an opportunity to learn, let's say. And that's just me extrapolating on what you were providing us with. And I guess what follows on from the failure part, which I also picked up, is you seem to have an ability to spot opportunities. I mean, you were at a conference and you decided, hey, let me talk to this guy for 4 hours instead of networking with anyone else or speaking to any speakers. How do you find opportunities like that guy at the conference, like the job in Dubai? What is your process for picking them?
Yeah, another really good question. Geez. So at least for the conference, my objective was just to go there and learn and figure out, okay, who's the craziest person that's so passionate about the space. And when I started talking to that guy, I could quickly tell, okay, this guy truly believes in like, the Ready Player One, Snow Crash type fantasy world. And he's building stuff in it. He was showing me all of his kind of virtual builds he was creating, and just on his iPad, just right there at the conference. He wasn't like a speaker. He was just like a regular guy. And seeing how passionate he was and seeing how much, he knew, I was like, hey, this is someone I need to like talk to and get to know more. So yeah, again, I don't have a great answer for that. It's just kind of identifying interesting people, talking to them, and then through that you can glean kind of opportunities, and you can position yourself to be in if that's where you think the world might be headed, you position yourself for that. So like here's a small example. When with our crypto fund, we didn't do any podcasts, we didn't do any marketing, we didn't, we thought, okay, we're going to be completely anon because we want to be safe and we don't want to get hacked or anything like that. And that was kind of our thought process. We thought we were being smart, but in reality, it's really advantageous, especially as an investor, for deal flow and getting access to news and all sorts of stuff. You want to be more public. And so with the NFT funds, quickly after I launched that fund, I launched something called Zima Red, which is a newsletter and podcast all about NFTs, because I was like, okay, I need to build a brand name in the NFT sector because it's going to help, turn my operations into much more than just a pure investor. It can also act as a megaphone for companies I'm investing in. It can also act as, access to deal flow and just learning in general. So yeah, that was a case of myself seeing the opportunity and saying, okay, I need to position myself for this future growth of this market.
And that follows very nicely from the initial thesis of viewing failures differently. Here, it's what I picked up, again, extrapolating on what you said, seems to be looking for curiosity. So people who are curious about stuff and passionate about stuff, and then just pursuing that, almost like a gut feeling of what feels right based on whatever data you get in, putting that all together and deciding what to go forward with, which is fascinating and obviously has worked getting you to where you are right now, which is involved in the NFT space. And now I can't wait to dive into your investment thesis and how you approach NFTs. But before that, taking a big step back, what is an NFT? Like, to someone who doesn't know, as an elevator pitch.
Yeah, so an NFT is a non-fungible token. And really what it is it's just a unique digital asset. And so, for example, like a fungible good is like a dollar. And so I have my dollar, you have your dollar, we can exchange those completely and it's totally fine. It doesn't matter. Like if I have your specific dollar, you have my specific dollar, they're fungible, they're interchangeable. And a non-fungible good is like, my computer. Like no one else in the world has my exact computer. You could also have, a MacBook Pro, but it is a completely, non-fungible good because it is your MacBook Pro. Or maybe, you have a one of one good. So like you have, the Mona Lisa or something like that. Like no one else has the Mona Lisa. And so, yeah, that's kind of how I explain what non-fungible tokens are. And what I think is just so interesting is that before NFTs existed, every good on the internet could just be copy and pasted, essentially, like unlimited times. And so the web was just completely limitless, essentially, right? Obviously there's like limits when you get to the server capacity and stuff like that, but overall, like you could copy and paste unlimited. And what's really cool is that NFTs introduce scarcity into the internet, and those dynamics, the dynamics of scarcity in a previously unlimited world, are very, very interesting. Like we don't know the full implications of it today, but we're seeing like the very first inklings of it right now with what's happening in the NFT markets, whether it be like an art market. Like there's been digital art for years and years and years, but it's only really started to take off now because people can actually truly own that piece of art and know that no one else can reproduce that. Sure, you can right click save the image and keep it on your computer, but in terms of actual ownership, you can follow the token on the blockchain and see, okay, there's only actually one owner of this NFT. And people are like, oh, well, it doesn't matter because I can just right click save and I can have my computer and it's the same thing. But it's kind of like I can go to, the Mona Lisa, take a picture of the Mona Lisa, hang that on my wall, and no one's going to be like, oh, like people are going to be like, oh, you have a picture of the Mona Lisa. It's not the real one. I'm like, well, yeah. So it's kind of like this similar concept where ownership really matters and scarcity really matters. And anyways, yeah, I think NFTs are introducing both those concepts into this world that was previously limitless and not scarce. So it's very, very interesting.
With all the hype around Beeple's giant sale and all these artists coming into the NFT space, people tend to think, oh, NFTs, that's digital art. But it's so much more than that. It's the fundamental concept of creating unique digital goods, which is absolutely fascinating to me, and the use cases that are going to come from that we haven't even thought of right now. And I absolutely love your Mona Lisa example. It's very similar to one I give myself, which obviously I've heard before. And that is, even if we take it beyond a picture, you get yourself a 3D replicated, like a 3D printed stroke by stroke replica of the Mona Lisa. Still not the original, is it? And no one's going to pay that price that you would for the original. So right now, what are the key areas of the NFT space that you're paying attention to?
Yeah. Okay. So I kind of bucket the categories of NFTs into 5 rough categories today, and also, saying NFTs is like almost saying internet. It's a very very diverse and broad kind of ecosystem. So I think in the future maybe we'll like bifurcate it. We'll kind of subcategorize certain NFTs because it will be so large. But okay, so number one, they're collectibles. These are assets with little to no utility. You can think of them like baseball cards or like crypto kitties. And number two, these are game assets. They're assets with high levels of utility within their universe. You can think of it like a sword in World of Warcraft with like 10 attack damage or something like that. There's some sort of stats. Number three is virtual land. These are like user owned social, e commerce, gaming, and creative platforms all rolled into one. And you can think of it like Second Life. And then number four is crypto art. This is art that's been tokenized and put on a blockchain. So it's, pretty straightforward. And number five is other. And other is like domain names, property titles, insurance, like all these other smaller categories today that are quite small, but one day will be, in my opinion, extremely large. But really, it's these main categories, and yeah, I mean, we mentioned art previously. That's been obviously booming. Collectibles recently, NFT collectibles have been extremely popular recently with CryptoPunks and NBA Top Shot and these kind of projects. Gaming is really exciting because basically now we have people that are able to play video games and earn money, and so that's like a total game changer. I think what makes collectibles as NFTs very exciting is obviously the scarcity. You can prove that something is scarce, but then also because they're completely digitally native assets, collectible people that collect stuff, they want to connect with other collectors and chat about their collection. So like if you're like a rare coin collector, you don't want to just like collect all these rare coins for yourself. You want to also connect with other people that are obsessed with rare coins and just chat about your collection and bond over that. And so that's one really great thing, on top of digital collectibles in the NFT space. And then virtual land. I think virtual land is really, really interesting because in my opinion, they're like the next generation social platforms. Because right now, I use Facebook, I use Instagram, I use whatever, Snapchat or whatever. I'm using these platforms and I have no upside. There's no, I'm adding value to their platform, but I'm getting nothing really in return except for like the enjoyment of using it. But with these virtual land platforms, really there's no objective. You can kind of just like do whatever you want, talk to people, build a house, build a gallery, build whatever. And what's really exciting about that is that I have some skin in the game in the sense that I have potential upside by buying a piece of land. It's almost like I'm now buying, equity of Facebook in some sense, right? It's not exact, but because if the overall platform does well, then the value of my land could increase, and I could sell it for more. On the flip side, of course, there's the obvious downside where I could buy land for $100. Maybe the platform just does terribly, and I could lose all that money, or I just kind of lose popularity and I sell it for $50. So I lost, $50 or whatever. So, but I really do think that changing the current paradigm of how the internet platforms, especially these kind of social platforms, are structured today, from value extractive of the user to value additive of the user, that to me is like a total game changer and a really, really good first direction of where we should be headed in terms of the internet. So that's one reason why I'm super excited about these different categories.
I mean, where to begin with that answer? That was amazing. I think anyone who's listening to this as a trader, investor, or entrepreneur will appreciate that breakdown of each specific category. I'll dive into those deeper right now before just mentioning that I really appreciate how you ended that with this really does change the playing field. And I feel this applies to decentralization as a whole. The reason I'm willing to dedicate the next 5 to 20 years of my life, heck, maybe longer, to this space is because we can fundamentally change the infrastructure of how the world works to make it more equal, more fair, and just better in every single way, which obviously really appreciate and love. Now, I see a little bit of overlap maybe in the assets that the categories that you've presented. And I'd love to dive a little deeper to make sure my understanding is complete here. So, what would the difference be between virtual land and a game asset? Isn't that kind of like a game asset? Like I can own a sword with 10 damage, but I could also own land with like that produces crops or is fun, like aesthetically pleasing, because skins are a big part of a game as well. So what's the difference between that, where you categorize it?
Yeah, so there's definitely a lot of overlap in the space, and I kind of categorize them in certain ways just for my own kind of organizational purposes. But yeah, I mean, there's definitely, you could point out that, hey, this is slightly like this and blah blah, which it is. But so the difference between a game asset and a virtual land asset, in my opinion, is that a game asset serves some sort of specific function within that universe or within that game. So like, for 𝐏𝐸 Infinity, which is like a small Pokemon like game that is, uses NFTs. This 𝐏𝐸, this creature, it'll have, 10 damage, 10 attack damage, and then like 5 defense and, whatever, so some sort of abilities, right? And with a virtual land, with a piece of virtual land, it's the optionality of what you can do with that land is unlimited, and there's not one specific function for that. It's very open-ended. It's like you can build, as I mentioned before, a house, you can build a gallery, you can build, I have a buddy that made a shoe store, and he's selling NFT shoes inside the shoe store, which is like, that's really cool. He's creating passive revenue for himself, and people can go inside, buy the shoes, put them on, and start walking around. And so I think that's the main difference in my opinion. It's kind of like a very open-ended kind of structure comparative to this specific defined function that's within a contained universe. Of course, like this piece of virtual land is contained within this virtual land platform, so it is within the universe. But again, it goes out to like the specific functions that this asset has is totally different.
And those nuances do sound very important, especially when it comes to formulating a sophisticated investment thesis, heck, building an entire fund around it. So I'd love to hear what your investment thesis is right now for the NFT space.
Yeah, so my investment thesis is extremely broad, and it's purposely very broad because this market is so early. Like 3 years ago, it like didn't exist, right? And so I decided, okay, let's go really broad with thesis because things will probably evolve. And my experience in crypto tells me that. You can see narratives shift all the time within crypto, where Bitcoin was like digital money, and now it's like digital gold. And I'm sure in a couple of years it's going to be like some other narrative. So the thesis for the fund is really NFTs enable a true metaverse to form because they give users property rights in the digital world. So it's a very broad thesis again, but it's really all about property rights and giving and empowering users to actually own their stuff inside these virtual environments. Because again, it goes back to like, people don't want to spend time, money, and effort into their lives that they can't, accumulate wealth and accumulate kind of stuff and goods and things like that. Like right now we're on the internet, we're living in like the Soviet Union, where like you don't own any of your stuff. Like on World of Warcraft, on Fortnite or whatever, you can buy digital goods. Specifically in Fortnite, you buy digital goods from the company. The company is making, Epic Games. They're making billions of dollars a year from sales of digital goods, but the users have no rights. They have zero rights. So whenever they want, not that they would, but whenever they want, they could say, nope, we're deleting all your stuff. All the stuff you spent, $1,000 on, we're going to delete it. And they don't need to give you a reason. They, for whatever, it just, that's how it is. And that seems pretty insane to me. If that were like a country, I wouldn't want to move to that country. I'd be like, that's crazy. I want to go move to the place that has strong property rights, and I know, and I'm certain that the stuff that all the time, money, and effort I spend working and doing things, I want to be kind of compensated for that, and so I'm going to move to the place that has strong rights. And yeah, so that's kind of the broad thesis. It really comes down to property rights and ownership, and as you know, that those kind of things are severely lacking in the internet right now, and I think that this is a great first step towards a more equitable kind of internet, which in turn will also lead to the metaverse, which is really just a virtual environment that people live, work, and play in.
How would a retail investor position themselves to take advantage of the NFT space, potentially leverage the pretty awesome investment thesis that you just presented to us?
So yeah, there's not a great way today for the average person to get exposure to the NFT ecosystem, because there's not a great like index that people can kind of purchase and get exposure to. A lot of people are working towards that. There's projects like 𝐉𝐸𝐬𝐧 and NFTX and kind of these different crypto related products that connect to NFTs in some method. And I think that's a great. I mean, these are like the top products today. So I'm not saying go buy those by any means. This is, not financial advice, but we're seeing people work towards creating indexes. And then, so that's kind of just like the regular kind of token exposure. And there's also things on like, this is kind of getting in the weeds here, but shardmarketcap.io. You can see different bundles of, different fractionalized NFTs. And some of them, there's bundles of assets called like Meta One and Nifty One. And it's ones with a Z. So Meta Ones and Nifty Ones. And Meta Ones is like a bundled basket of different virtual land. And so you can like buy shares of that. And then, shards of that. And then the Nifty Ones is a bundle of high value art from different artists. And you can get exposure to like art and get exposure to virtual land. So these are, the very, very early kind of days in this space where stuff like that it makes a ton of sense to me and should exist. But again, this is like very early. And my only other advice, would be to, if you want to get involved in the NFT space and get financial exposure to it, would just be to dive in and kind of do a ton of research and really kind of buy whatever you love directly. But also I would caution people, NFTs are not pure financial assets. These are like collectibles. These are art. These are game assets, right? So there's not pure financial reasons to buy and trade these things. You should kind of be thinking about your personal preference and longer term, because right now, the market is quite hot. And I think that it could be a little overheated. I think that that'll probably stop eventually, whether it's tomorrow or 3 years from now, I don't know. But when it does stop, I would just, I would want the owner of these NFTs to be like, hey, you know what? Maybe I'm down on how much I spent, but I'm happy because I like these things, right? Saying that, no one really listens. Like people are going to jump into things anyways. But really, you should just be thinking very long term when it comes to NFTs, because a lot of this stuff won't be around. 99% of it won't be around in the next 2 to 3 years.
When it comes to collectibles, we've seen time and time again in the physical world how brand is what gives them value. So take sneakers, for example, Nike, Adidas, they're the ones which keep their value, continue going up. Pokemon cards, they've gone extremely parabolic. Magic the Gathering cards, you can take a look at expensive watches. Like Rolexes are seen as the safe one because the brand is so strong. And that's why I really double down on what you presented in the second half, which is buy stuff you really like and want to be a part of, because that is actually a bit of alpha over there, because your edge is you're spotting someone who's creating a strong connection and a strong community because you like the collectible, not the price or the potential of increase in future price. What I find actually in my experience has been pretty ineffective is looking for indexes in early stage volatile markets, because I just expect the turnover to be so high over the next few years that exposing yourself to an index will probably be less profitable than concentrated bets on just the biggest players who are going to make up most of the market.
Yeah, I have to basically agree to that. I think in some instances, index obviously make a ton of sense, like complete sense. But you're right. In early stage markets, it's pretty difficult, and especially when we don't even really know. People are still figuring out how to fairly value these assets, right? So that's if you can't even fairly value the NFT, then how are you going to create an effective index, right? But I do think that the index products that are out today in the NFT space, they're doing great work, and really what we should be seeing is just a ton of experimentation. And I think that maybe one of these products will be the best product for kind of exposure. But yeah, it's super early, so all this stuff is extremely high risk. So you just have to, again, just caution yourself and be careful about what you're kind of investing in.
I love how you keep mentioning the risk involved, which is very responsible and necessary for what's going on in the market right now. So how are you positioning yourself at Sfermion, given the current crazy market conditions in such an early stage market?
Okay, yeah. So we focus on kind of out of those 5 categories I named previously, we really focus on collectibles, game assets, and virtual lands. And we have a pretty minor exposure to crypto art or just NFT art. That could change, but as of now, these are kind of the 3 sectors we focus on. And yeah, it's really difficult in this current environment to find value. So, there's two things that we're doing. We're kind of doubling down on the, Bitcoins and Ethereums of the space. And then also we're going at the earliest stages of trying to unearth kind of new projects and new value. So yeah, because it's really kind of difficult to find. There's a lot of stuff that's kind of in the middle, the vast majority. And that, I don't know if a lot of that is going to be around. So you kind of have to go on either end of the spectrum to really pay a high price for solid value, or kind of take a much more concentrated risk on these newer projects that are launching. And based off of your thesis on that specific project, hopefully that becomes the Bitcoins and Ethereums of the future. But what's really interesting about this ecosystem is that because it's so diverse, they have different value drivers. So collectibles, the value driver for a collectible is all about the narrative around the asset. I mean, you mentioned it before, talking about sneakers, for example, like, Jordans, like the Jordan sneaker comes with all the narrative and kind of story associated with Jordan, right? So that's a huge and compelling story and reason to purchase that good. And something like CryptoPunks, which is a NFT project, that's a collectible that people love, and the reason being is that they were the first NFTs on Ethereum. Now recently, the past couple of weeks, that's been kind of people are claiming no, there's actually earlier projects, but anyways, they were like considered the first NFT project on Ethereum. They were made by two geniuses in Brooklyn, like out of their kind of like small office and stuff like that. They're not like these like super rich guys or anything like that. And they had a Bitcoin-esque fair launch, meaning that they actually created 10,000 of these CryptoPunks, and they didn't sell any of them. They just gave them up for free, so anyone could claim them at any time. And what they did is they kept 1,000 for themselves as like potential future payment. But really, they had no idea. And now the cheapest CryptoPunk is going for around $40,000, which is incredible. And it took this project 3 years of kind of going through the NFT market cycles and kind of going through the broader crypto market cycles to really gain adoption. And then, on top of that, of course, I mentioned the limited supply of 10,000. And then there's different levels of rarity within these CryptoPunks. So like that adds to the story. It's like, oh, I have a alien punk, I have a zombie punk, and so on and so forth. So all these bits of the story add to this narrative and create the value. So that's number one. Number two, for game assets, the value driver is all about the utility. So if my sword does 10 damage, your sword does 100, your sword will be more valuable in theory. Number three, for virtual land, the value driver is all about the location content parameters. So it's actually the same as physical land, which is kind of cool. But so location, are you in like Illinois on a middle of nowhere, or are you in Manhattan? The content, are you a single family home or are you a skyscraper? And then parameters, which is like the zoning laws. It's like the height, width, length that you're able to build in this piece of land. Number four, for crypto art, the value driver is all about the artist reputation or brand. So if I make a Banksy piece like Andrew Steinwold, the NFT guy, no one cares, right? Banksy makes the exact same piece of art, it's going to go for millions of dollars, right? So, and it's really because his associated brand and reputation. Like everyone knows Banksy is an incredible artist that is world renowned and et cetera. And then number five, obviously the value drivers are variable because the categories themselves are variable. So it's really interesting to be in a market where things are so diverse and the value drivers are so diverse. And I mean those are the value drivers that I came up with. Like maybe I'm wrong. I think I'm relatively right. But we're going to see things evolve in the future. So who knows what will play out.
I mean, man, that makes me want to invest in Sfermion. That was so much alpha fitted into one specific section, breaking down every single one of those categories. It's clear a lot of thought has gone into the reasoning behind each category, the investment thesis behind them. I mean, I had the idea just now with if you can find the top talent in the current property industry and the best people of identifying value there, bring them over, use that skill set to actually build a portfolio of virtual land property. I mean, the people who are smart enough and quick enough to do that early on the right platforms, man, that's going to make an absolute killing. And really, that is what you guys are doing right now, or positioning yourselves in, and in a very flexible way, just like we spoke about at the start with waiting for failure. Collectibles could, not that I think in any way they will, collectibles could die. You guys can jump to NFT insurance. You guys can fall back on the virtual land, the game assets, just go with the market however it evolves. So why would you do this through Sfermion as opposed to as an individual?
Yeah, no, it's a really good question. So I'm not very, this is going to sound kind of silly, but I'm not super motivated by money. And I think the economics make a ton of sense if you're motivated by money to kind of go forward by yourself with your own capital. Because obviously there's way less expenses, way less overhead, and your ability to get inside deals is much, much greater as an individual versus a fund. A fund, your check sizes need to be pretty large for it to really make sense. As an individual, you can invest, $25 to $100,000, and that would make total sense for you. Well, unless you're like a billionaire, but most people are not. So for me, it's been more about I wanted to build something very impactful and very kind of important for whatever space I'm in, and my objective for Sfermion is to become the number one NFT related investment fund in the world, and so for me, it's the money will come if I can achieve that. But I thought, okay, if I can build out this firm and build out a team and build out a world-class team and become a multifaceted entity that's not just investing, but also publishing research and publishing content and perhaps making some internal tools that we release publicly, like maybe a data product, maybe a portfolio kind of tracker product, because that doesn't really exist quite yet. So I thought that, okay, I could really build something great if I turn this into a firm versus just by myself as an individual.
That's another terrific answer. Something I've been contemplating recently, because there are a lot of funds coming up in the space, and I do wonder often, why do people do it as a fund when they could do it solo and probably be a little bit more profitable? But that answer is, it's always more fun to make money with friends, and also your long-term scope is way bigger, because as one person you can work twice as hard as a regular person. That's still only two people, versus getting a whole team around you with equal motivation and equal attachment to the end reward. What would you say separates Sfermion from any other NFT focused fund?
Yeah, so right now, I'm the only traditional NFT fund that exists as of right now. I know that there's like 1,000 in the works. I like to say, like, 2021 is the year, like it's similar to 2017 where everyone's launching a crypto fund. And I think 2021, everyone's gonna be launching an NFT fund. Not that that's a bad thing. I think that that's actually great validation. But I would say that, I've been full-time NFT since 2019, and that makes a big difference. And you can, if you kind of talk to some people and you say, hey, how long have you been involved in NFTs? And they're like, oh, a couple months. And then you hear about them launching a fund. You're like, okay, well, that's a little bit suspect. And maybe they are, extremely well versed in the space and someone that you do want to bet on. So I can't, fault those people whatsoever. But there are some people that I've spoken to where clearly, like, they're very, very, very new, and they're kind of capitalizing on the hype and what's going on, because they know slightly more than other people, which that's a worrying sign. We saw that in 2017 quite a bit, and I was guilty of launching a crypto fund in 2017, so it's I did the same thing. It's, I don't know how much I can talk about my edge publicly, but I really think it's about, with all investments, is about betting on individuals or teams that are clearly obsessed with the problem that they're solving, or the product that they're building and whatnot. And I would just say, focus on the true believers.
That's fantastic advice, and it's definitely a positive for you if more funds come in, especially new ones that don't know what they're doing, because it means more money in the space. A fund, it's a competition. Like, when you win, someone else loses, and if there are more people with a lot of money that don't have the same edges or passion that you do, that long-term game is going to go to you guys. So always good when the space grows from that regard, and I absolutely love what you guys are doing at Sfermion. I'm gonna follow up with this after the conversation, find out a bit more about it, because I love it. It's a great position to be in, and you guys got into that position well before 2021, where Gary Vee, Logan Paul, and every other famous person is talking about NFTs. Congratulations, great timing, and you guys did it. So future now. You said the others category is very variable, and we have no idea what's going to come out of the NFT market. But if you had to make a prediction, and you can even attach a percentage of success to this, say 40%, 30%, however low you want it to be, what do you think is going to be the most promising stuff coming out in the future out of the NFT space, be it insurance, be it collectibles, art? And what projects right now would you bet on surviving the long term?
Oh, that's a really tough question. Okay, so yeah, in terms of what's going to become the biggest potential kind of category within the space, I think contracts and all types of different contracts, whether it be like legal or derivative contracts, or all types are going to be created, go on chain and be created as NFTs. I think IP in terms of like podcasts, newsletters, all sorts of video content are going to be NFTs. So that's music. We're seeing music kind of pop up recently in the past couple of months, and that's an area that I'm not super well versed in, the NFT music scene. I've been trying to catch, trying to increase my knowledge base around that, but I think that's going to be absolutely massive. Similar to how we see the art market now, I think we're going to see musicians kind of be empowered by this, by NFTs for sure. But in terms of what's going to be the largest, it's really tough for me to say. Over the longest time horizon, I do think virtual lands. And the reason being is because I do see them as the next generation social media platforms. Because what they are is they're platforms with no objective. You can just do whatever you want. You do whatever you want in them. And they're built to be social. So whether you can talk to people on voice or talk to people on text and whatnot. So obviously sociability is a massive stickiness factor for any sort of platform. And then with the added benefit of a potential user upside, where they have some sort of quasi equity, I think that's incredible. And if we can, so like one example I like to use for that is if Facebook decided, hey guys, we're going to make 1 million profiles as NFTs, and only 1 million, and you guys can do whatever you want with them. So it's not just posting your pictures, but you guys can make an e-commerce store, make a mini game on your piece of Facebook land or whatever. You can do, if you know how to code, you can do whatever you want, build a piece of art on it, put your art there, whatever. I mean, that 1 million profiles on Facebook, NFT, Facebook land, whatever you want to call it, that would become the most expensive virtual real estate in the world. And it would be like the Manhattan of the internet in theory, right? Because people would want to be there. You want to put your business there, put your portfolio there, put your profile there, whatever. And if you didn't put anything great there, you would sell your piece of land and someone else would put something great there. So like like Manhattan is like very dense with very high value buildings on it, because it doesn't make sense to build a single family home. You want to build a skyscraper. And so that's kind of how I would see that playing out if Facebook did something like that. But anyways, that's kind of a tangent. But I really do think that the sociability factor and the skin in the game factor for virtual land platforms is, to me, so compelling that it's got to be one of the largest potential markets in the future. But that being said, I think the art market, the traditional art market, $65 billion a year, will get eaten by NFTs. I think that the collectibles market, hundreds of $1 billion per year, will get eaten by NFTs. I think that the video game market, which is hundreds of $1 billion a year, will get eaten by NFTs. And then virtual land platforms, I equate that to social media platforms, that'll get eaten by NFTs, right? If you have two comparable platforms, by the way, this won't happen for the next 5, 10, 20 years, right? It's going to take a long time. But if you have two comparable platforms, a Facebook and a Facebook that uses NFTs with skin in the game, people are going to say, well, if they're the same, then why would I not choose the one with skin in the game? And I could maybe earn some money. And so, yeah, to me, like, this is without a doubt just going to happen. And that virtual land, in my opinion, is potentially the largest market. And your second part of the question was, what companies today would I want to bet on? So I'm trying to think what I can and cannot talk about. Okay, so things that I like, things that I think are very exciting, are platforms like OpenSea, because there's two areas within the NFT sector that I'm very excited about. Number one is kind of the anything revolving around the trading infrastructure. And the reason being is that the big innovation here with NFTs is that they're tradable digital goods, right? So that's like, whoa, that's really exciting. Okay, you can trade these things now. Okay, where do you trade them, or what do you do with them? And on that side, I think marketplaces are very appealing, and then also things like NFT collateralized loan platforms is very exciting. There's a platform called like NFT Fi, where you can take your NFT, put it up on the marketplace, and people say, hey, it's a Beeple piece. I'll give you $100,000 loan for that Beeple piece. And, the payback terms are like 7-day, 30-day, 90-day or custom. And then you can input however much you want to be paid back. So like your APR could be, 5%, 10%, 100%, 1,000%, whatever you want to do. And that person can either accept those loan terms or they could not. So I have a buddy who bought a CryptoKitty and he put it on the market and he got a $25,000 loan for a CryptoKitty, right? And this is all, instantaneous, and like that in itself unlocks, and this all happened within like a day, right? There's no loan, you don't need to check your credit history. There's not all these reports. You're not going through all these different, different kind of third parties. It's just done. And that unlocking of value is so mind blowing that it's going to transform the planet. You know what I mean? And the person who took the loan, we don't know if he was in, or he or she was in, India, Russia, like UK. We have no idea. They just got it and then paid back, and after 30 days and it was done. So that's really exciting. But anyways, going back to like the trading infrastructure, marketplaces, I think that there should be one massive aggregator type marketplace, like an eBay, that aggregates all types of NFTs. And then I think that there should be different marketplaces that focus on specific niches within NFTs, because again, NFTs are so diverse. So there should be a couple for art, a couple for virtual land, a couple for collectibles, a couple for game assets, etc. And then there should be an OpenSea type platform that aggregates everything together. And that's kind of my opinion on the trading infrastructure side. On the other side is the experiential layer. So, okay, cool. I have my NFTs. I trade them. I loan them, whatever, do whatever I want. Now what do I do with them? I want to experience them. I want to do something with them. The experiential layer to me is like, what does the Instagram of NFTs look like? Or what does the TikTok of NFTs look like? Or what is the virtual world platform that makes NFTs operable in world? Meaning that if I have my Axie creatures, which is my little Pokemon, I can bring them to this virtual world, even though they're not like connected. They maybe don't even know about each other. And I can actually battle them in this world, right? And it'll show little animations, and other people can walk over and like watch us battle and comment and maybe make bets or like whatever they want. That's really, really crazy. If you have a virtual world platform whose sole purpose is to make all other NFTs operable in world, it becomes like the natural aggregator or natural like social layer or place where people want to go because other people are there and you can use your stuff there. And so that to me is super, super exciting. And I invested in one company that's kind of, aiming to do that. But it's still extremely early days. So we'll see. Yeah, those are the kind of the two big spots that I see playing out going forward.
So Andrew, you don't know this, but we've actually made an initiative to try push our podcast episodes closer to the 30-minute mark. And here we are 47 minutes in, and I'm just holding myself back from diving deep into every single point you're making, because you've clearly spent so much time thinking about the space, formulating these ideas, and your passion is exuded in every answer. You're excited, you're diving deep into the nuances and where you think the space is going to go. So it's a pleasure to talk to you, and we definitely need to have you on again. So I know people can learn a lot more about everything you've been talking about on the Zima Red newsletter and podcast. Could you tell us a little bit about that?
Yeah, so it's just a podcast and newsletter that I started in October 2019. And I wanted to focus full-time just on NFT stuff. Podcasts, I just get to talk to the most amazing founders, creatives, and just people inside the NFT space. And for me, that's like something that I just absolutely love to do. It's incredible. And then the newsletter is a little more esoteric. I read about very random topics involving NFTs. It's not like, what are NFTs, like intro stuff. It's very like, oh, here's a weird topic, like the promise effect, why non-functional NFTs will accrue value faster than functional NFTs. It's like very like weird topics. So that's not for everyone, but the podcast is a great place to start. And if you get dive deeper, you can head on over to the newsletter and check that out as well.
Well, definitely recommend every single person who's made it up until this point in this episode absolutely has to check out the Zima Red newsletter and podcast. I know I'm going to be a much more regular listener than I already am, and follow up on all of that, because Andrew, this has been terrific. You've blown me away with your knowledge on the NFT space, and I do not say that lightly. Meditators, that is going to be everything for this episode. You'll find links in the description below to all of Andrew's platforms. Until next time, thanks so much for joining us. Thank you so much for tuning in to another episode of the Market Meditations podcast. If you enjoyed this episode and you'd like us to continue bringing you fascinating people from across the world, please leave us a review on Apple Podcasts, Spotify, or wherever else you like to listen to these podcasts, and share the episode with a friend. If you have feedback or an idea for a potential guest, reach out to me on Twitter at 𝐏𝐸𝐺, and do not forget we write a newsletter covering all important topics in crypto and traditional markets. We send it out 3 times a week. The Market Meditations newsletter. You also get early access to these episodes, and you get transcripts and extra notes as well, so make sure to subscribe there as well.